Hi and welcome to the Market Alert for Tuesday the 6th of July 2021. Just before we get into the Market Alert, I've received quite a few emails about the settings inside of Omni Predictor where you had signals, I've not had signals, etc. There seems to be a bit of a discrepancy. So let me cover this first. Inside of the member section of the website at the top right you will see Omni Predictor settings. This video here will contain the current settings that I'm using in the software, and the video will also explain how to change these settings as shown in the video. I've also recorded another video showing you why there can be a discrepancy between what you see in my chart and what is in yours based upon the different brokers that are available and the way they calculate the prices, etc. So we'll also put a link to this video in the Market Alert as well. Okay, let's move on and have a look at yesterday. The European markets were open. The US were closed in observation of the Independent Day celebrations. European indices ended the session higher after a bit of a sell-off at the start. So we'll have a look at that in detail in a moment. News for this week. Today, Tuesday, this is what we've got till, let's have a look, economic sentiment, German ZEW economic sentiment, they're out at 10 a.m. and then over to the US at 3 p.m. What I'm more interested in here is the big stuff. We've got FOMC meeting minutes out tomorrow evening at 7 p.m. And then I'm having a look, we've got a G20 meeting on Thursday, that's day one. That continues into Friday, and then we've got the criminal speaking on Friday the 9th at 11 a.m. And also at that same time, we've got Bailey speaking as well. So sort of end of the week, the big guns are out and the G20 meeting as well. But tomorrow, the FOMC meeting minutes. This is not a quarterly one, so there'll be no press conference from this one. And let's have a look at the Dow. We'll start off with that, if I can find it. And this is the Dow. So let's start off with the daily chart. You can see that the electronic market trading yesterday, trading up to the, or more or less the all-time high, and the 89% retracement on the fibs as well. Sorry, not the all-time high. We drag the chart over, you'll see this. The recent high to the left and 89% from here to here. So this is why the market has stopped at this area. So we need to break through this if we're going to move higher. But what I love about this is that from this high to this low projected back is the areas where you tend to get a bit of a sell-off after. And, you know, we have the potential for that. I mean, let's face it, we've had the non-farm payrolls last week. We've had all this so-called good news, and the market has failed to go up to the new all-time high. So are we going to see some sort of correction coming into the markets? If not, then we'll go through and take out the recent high to the left, and then, sorry, the all-time high, which is this one here. So your recent high to the left and then the all-time high. But this is a very, very important area for the market. Any 89% retracement after making the all-time highs is an area that you should watch very closely. Overnight, we got a bit of weakness in the Dow coming off yesterday's electronic high. You can see this at the moment. Not down a great deal, down 50 points at the moment. Needs to stay above the DP if it's going to move back to the upside. And again, just straight look here from this low to this high back to here. You'll see that 78.89 where the market's currently finding support, straight to that area. This is the great thing with fibs. Once you get used to actually looking at it, a price chart, you can see they just jump out at you as you observe what's going on in the chart. And when you get them at these levels, and then you get buying or demand coming in at these areas as well, it gives you a great opportunity to buy back in. Moving on to the DAX, which had a bit more activity, as can be seen by the daily chart. Prices moving down sharply. and then moving back before the close. Now yesterday we drew in the fibs, and I'll just put them back in because we came down to most of them. We stopped at 62, and then the market found support and made its way back for the remainder of the session, as the Dow on the electronic market also did the same. So again, let's just step back, have a look, see where we are. You can see the sell-off in the 30-minute chart, and then the straight reversal in the 30-minute chart, and they move the market all the way back up. Again, you'll see that not a single price bar in the 30-minute actually closed below the 5 bar, giving you that measurement of momentum. It was only later on in the evening when prices actually traded sideways and then closed back below. Overnight, again, you can see at the moment, just from this low to this high, we're currently at 89%. I'll just draw that in for you just to show you. And there you can see just coming through 89% on the fibs there as well. So this psychological level, BRN, big round number, is important, as is the DP and the 200 MA at this level as well. And then down to yesterday, that was the day before's low. This is yesterday's low, which will be important as well. It's only 100 points away, just over 100 points down to this level for the DAX, but the DP is in the way. The daily pivot, which is sort of the center point of the previous day's range, is the crucial area there. Needs to stay above this in order to move to the upside. We'll see what happens in the futures market when it kicks off. Looking at it in more detail inside of a 2-minute chart. Again, if we just compress the chart there, you can see overnight the market sideways, and then in a very tiny range from the previous day's high. There's your DP on the downside as well, but looking a bit weakish in the 2-minute. Like I say, what will determine this is its direction is going to be the futures market when it opens at 7 a.m., which is a good 20 minutes away as I'm recording at this time. I'll have a look at yesterday's trade in more detail in just a moment, but first a look at the metals market. We'll start off with the daily silver. This up strongly on the overnight. I thought we were going to get a bit of a down move after yesterday, but obviously the Asian market moving the futures to the upside at the moment. We've got all of the fibs marked to the upside, and the next upside target is back to the $27 range, and then that 27.50 where we had all of that support a few weeks ago until the bankers decided to shake out the market down to 25.50. That's right. Yeah, 25.50. And the order that I had at 25.45 was never filled, so I'll buy and add more to this position on some pullbacks when the market has them, which it's guaranteed to have in silver on an intraday basis, generally at 1:30 when JP Morgan and co come in and slam the price using the futures in order to do it. Meanwhile, the dollar at the moment is moving back to the downside. Again, it'll be interesting to see how much weakness the Fed allows. I can see we're through 38 at the moment, just coming through 50% retracement from this low to this high. So again, crucial area here. You've got the 89% tying in with a round number and also the 200 MA in the daily chart. So that gives you targets on the downside. And that's likely to take you in the silver around to this sort of level at 27 or 27.50 as well. And gold also moving to the upside, coming off the low that we had back in April. You can see there that became a support for the market. And then on the upside, I'm just going to redraw these from the high that we have. Just bring that down so we can see it. So from this high down to this low, let's just project back and have a look, see where prices are. So we're heading towards the 38% retracement. Notice that at 50%, which isn't a fib number, but it's a useful number, we can see that we've got the 200 MA there as well, so a bit of resistance to overcome there for the gold price should they continue to move to the upside there. Okay, so that's more or less a review and what to expect for today. Let's have a look at yesterday, see what happened. Very quiet, as to be expected. After the initial move to the downside, you can see that they moved prices down. It's not as big as it looks because obviously we didn't have the Dow move prices down towards the S2, and as it did this, I was just looking and drawing in fibs just to see where the market was likely to find some support at the 89, looking for the opportunity to buy back, but the market just traded sideways. You can see it sitting on that 89 until it breaks it and then moves to the downside, which you'll see in just a moment as it comes back, and tests at the S2. And again, you can see the testing there, different coloured bar. But the market trades sideways, and then you'll see a shakeout occur in a moment. You can see how quiet it was. The market had coiled itself into a sideways move. And what you'll get in this situation is a false breakout. And you'll see that occurring now. You'll see the spike in volume taking the stops out, and then they bring the market back, and again you can see them testing the market. So what they do is they slam it down. So anybody else want to sell? No thanks, and they buy it back, which is why you see the green bar there with the buying coming back into the market. And then we get a potential signal, and then it's just a matter of the trade continuing to the upside. And what I did here was draw in some fibs from this high to this low to give some targets. Particularly in this range where the market would run out of steam, and then the only thing I need to do here is I've moved the stop to break even. The 5-bar moving average has gone through the entry and is continuing to move higher with the prices there. So now we struggle a bit at 50%. Market trades below the 5-bar moving average, but given that we've got these targets up here, let's see if the market can manage to move to the upside. You'll also notice that across to the left here, I also drew this in, and again you can see we're going to struggle here a bit. We need to drive through this with some new buying in order to move to the upside, and there it turns up through the BRN and then through the 62% and the back through that S1 level as well. So again, as prices move higher, you are going to see profit taking coming into the market, particularly at these levels. We've then got to take out the high of where the selling came in, which is at the top of this bar. Price is still sideways, still trading, closing above and trading above the 5-bar moving average there. And then again, we have another spike up. Stop hits the 78 and the 200. And at this level, there's nothing wrong with taking the profits if you want to take the profits. But I adhered to the rules. There's the confirmation of further selling coming into the market. You can see the increase in volume. Prices come off the high, so it was under pressure and selling, and then prices trade sideways. And it's at this point, as it comes back and closes below the 5-bar moving average, that I was out of the trade for 41 points, and then the market traded sideways, found support at the previous day's low, which I'd not spotted at the time because it could have stayed with this trade, because as I've mentioned a million times in the market alerts, in a bull market the traders want to see prices stay above the previous day's low. It's very important to do that. And that's exactly what happened after the market moved back to the upside. And what I did here, just to see what strength it had got, was draw from the high to the low, projected back up, just to see if the market would get through this 89% here, see if it ran into trouble. And you can have a lot of fun with doing this as the market makes its way to these levels. There you go, you can see you've just got to the 89, and then the market comes back. And on the downside, too, you can use these measurements as well, which was a bit late drawing these in, but again you can see 38, 50 as the market moves back and then finds support at these levels. So we go into the 10 a.m. just after 10 a.m. and I just left these on the chart. Again, you can see coming down to that 78%, and then finding support and moving back. And then I drew some back on the upside, and you can see there stopping at 78%. That was from here to here. And when a market gets into a sideways move, you can just do this all day long and develop techniques for buying it or selling at these levels. So that was the morning session. And then as we headed to the afternoon, we knew it was going to be quiet because the Dow, again, no doubt at all on the cash market. The electronic market was moving, but not a lot. And you'll see, as I fast forward through this, the market just sideways and really quiet there. So that was yesterday. Today we should see a lot more activity. There's a lot of weakness around at the moment in the market. Let's just have a quick look at the 2 minute. Again, you can see we've been moving lower as I've been recording. Still 15 minutes away from the futures market opening up, but I won't be surprised if we don't have a spike down to the DP, or if they want to bring it back up to the high. But both of these areas are going to be one support, that is the DP, and resistance on the high, because we've seen it already being a resistance in conjunction with the 200 MA there. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.